document is done. We will refurbish for sourcing of documents. And then if after now different suppliers have seen and maybe they have an interest in it, they submit their bids manually. They submit their bids, and then from there is a given period that are given. I think the procurement officer have well conversant with bids. The bids will there is the time now, the closing of bids. And then let me go to the next slide. There is opening, sorry, I think you can see this properly, but there's opening of sourcing documents. So they form a committee where now the documents are open, depending and seeing different suppliers, how they have done their bidding. From there, the committee is formed. That is for the purposes of evaluation committee, and scoring and sealing. This is now for the purposes of scoring the one who will be awarded the contract. From there, we go to the next stage where recommendation for award. They will recommend the best supplier that's for the in case of a contractor or a contractor who has won their award. And the award in this stage is awarded to the supplier. Award tender by the Ministry Tender Committee. And then from there, the award is approved. After the award has been approved by the chief officer, we go to notification of awards result to suppliers. Now, the supplier is notified through the email because everything is done in the system. Through the email, whoever has won the award is notified, and even whoever has been rejected is given is notified and given the regret of the reject letter. Then from there is generation of order and framework agreement. At this point is where now the purchasing order is developed by the procurement officer, and any contractual agreement between now the supplier and the department is done. Then the first level approval, that is the chief officer approves the first level. And then the second one, the head of supply chain approves. Then from there, the supplier is given the purchasing order. This now has given the supplier, as the same as the other one, the supplier the authority to supply the good. He has the document that gives him or her power to supply. And in this stage now, the goods are supplied to the department. And the next stage after the goods has been verified, they're in order, they have been supplied now, we get the receipts and inspection of goods. And at the same time, what I said in the other one, an inspection committee is formed that inspects the goods, whether they are in the right order. The other stage, we have the invoicing. We have the validation. We validate whether the invoice is in the right order. And then from there now, the final invoice approved by the head of accounting unit. And then the payment is generated through internet banking transmission. You receive your payment through the internet banking, and the supplier is happy. The supplier is paid for his supplies. Yeah, I know it was a tedious process. But if all the team players in that are all put together, it's not that tedious process. It's something that can take place within 2-3 days.
Thank you, Nancy. for debunking the whole IFMIS process. I think I'm well informed. I hope the rest of the participants are too. Yes, thank you.
In the next slide, we are going to talk about PFM Acts 2012 guidelines. These are the guidelines that guide us. Specifically, we have just done about the payment procedure. What are the things that guide us in our day-to-day operations? The first thing, we have Article 66 saying in the PFM Act 2012 that an accounting officer shall prepare a report for each quarter of the financial year in respect to the entity, not later than 15 days after the end of each quarter. The accounting officer submits the quarterly report to the county treasury. I know most of us maybe get bored when every quarter we are asking for the reports. You have seen this is something that is in our PFM Act. That in every quarter, the accounting officer must give a report to the county treasury. And we are the one who are the bearer of that information, that we are supposed to consolidate that information. We submit to our accounting officer, and he is able or she is in a right position to submit it at the right time. For example, all of us will understand that we have not been tapped. It's just the regulation that we are supposed to submit quarterly report to the county treasury, and the process continues up to the national treasury. Then we have Article that one that is states the interest holder is supposed to account for the use of cash within 7 days after the completion of the activity or travel. If you have done your activity after maybe you spend like 1 month, 7 days after completion of your activity, you are supposed to surrender or to account for the funds that you are given for that purposes. If it's travel, if you had a trip for 5 days and you're back, you have 7 days to account for that. Prior to that, the amount of cash advance not accounted shall become a debt owed by the government officer. And the debt shall be subjected to an interest at the rate of prescribed by the regulation. Like right now, I think we have a rate of 14% from the Central Bank of Kenya. Meaning now you'll be charged at that rate. Then the debt and the interest may be recovered from the salary or other amount owed to the government officer. And it must be interested. I hope that is sinking and going home.
Okay. Yes, it is to me.
Then we have all that we do, that is preparing the voucher, having our impress. What at the end of the day, what are we supposed to have? At least I need to have, at least give me at least 1, 2, 3 documents that we prepare after doing all these tiny things, this data correction here and there. Which document do we, which financial documents do we develop at the end of the day?
Okay. Participants, I hope we're still together. We are nearing the end of our presentation. Which documents does the finance team create that is usually taken to Treasury for audit before a payment or a check is written to a supplier or a contractor? Hi, are we together? Which document do you think is prepared by the finance team when they get all the documents that they need? I'm sure I have accountants in this list. Maybe we can help each other. Hello.
The financial reporting document, I think maybe some of us are getting stupid, maybe we do something, yes, only. The financial documents that most of the we do prepare, that we're supposed to prepare. We have the expenditure analysis. We have revenue analysis. All of them, those are our income statement, which is supposed to prepare at the end of the quarter and at the end of the year. And then we have balance sheets and bank, that is statement of financial position. And we have cash flow statement. Yeah. Thank you. Thank you so much. Maybe now we can.
Thank you very much, Nancy, for that very informative session. I hope our colleagues are now well informed. Any questions or comments that we can address before we close up this webinar? Or even maybe if you'd like to comment with your voice, you can unmute yourself. Thank you very much for the elaborate presentation. Thank you, Ali Omar. Thank you, Fatma, for the informative session. Thank you. Yes, Mutai, it's good to know we are still together. Any comments? Please
Hello,
send
good evening.
Good evening.
Matron Moringa here.
Yes, Matron, Karibu.
Thank you for that elaborate presentation, Nancy. Actually, I've really learned a lot here. And from the looks of things, I think we might need to go back to this presentation again. Because so many things, I think we took them for granted. But now I think we've done something, especially on the financial plan. Hizi ni vitu tu tunaweka kwa head, but we never follow up. But I think this is good, and as program managers, I think we need to take Nancy to come again and take people into details on this. Others, thank you so much. It was nice.
Thank you, Matron. We appreciate that. I can see our colleagues requesting for the slides to be shared. Kindly